Hey there, Eric Sabatini, mortgage agent here again. This week I want to share a deal that I was able to get done for clients that were growing extremely frustrated with their bank and other mortgage professionals because they were being qualified for a lot less, okay? So let's look at Mary and Joe. They're both retired and they sold their house in Burlington in August of 2022. After the sale of their home, they pocketed a nice amount of money. Instead of having it sit in their bank account, they invested it, okay? Smart move. Fast forward to today, Mary and Joe have been renting in Niagara, waiting for the perfect house to come around, and of course they find it, all right? Never having financing issues in the past, they waltz into their bank of 20 plus years, and they're qualified for a $125K mortgage based on their pension income alone. They reach out to their landlord's favorite mortgage professional, similar response. Mary and Joe, the best we can do for you is $125K max. If you have a cosigner, be sure to give us a call back. With angst, Mary and Joe talk to their financial advisor because they want to pull some cash from their investments. She tells them, call Eric. He gets my clients qualified for more. I don't know how he does it, but he does get them to do it most of the time without pulling anything. So I do my thing. I review income, and yes, on income alone, they don't qualify for much, okay? But with my rigorous pre-approval standards, I determine that Mary and Joe have significant investments, money in RRSPs, mutual funds, stocks and bonds, and sitting in TFSA accounts. What many bank branches don't offer and many mortgage professionals don't even know about is that there are A lenders, big banks, and others that qualify clients using something called the total net worth policy. In a nutshell, this total net worth program allows us to exceed standard debt to income ratios provided the client has significant liquid assets. So let's look at Mary and Joe again. Okay, using standard mortgage qualifying, they qualified for 125K, but they needed 425K for the new house. So how did I do it when others couldn't? I was able to show that Mary and Joe had more than $300,000 spread amongst their RRSPs, invested in stocks, bonds, mutual funds, and sitting in their TFSAs. I was able to fit their scenario into the total net worth policy, and they were able to get the mortgage that they wanted because of their assets. So think about your clients for a minute. Think about your high net worth clients. Perhaps you have a large database of investors with significant assets. Many of these clients have long been told that their moderate income on paper doesn't allow them to qualify for much. But there are additional mortgage solutions out there provided that we meet the policy requirements. So are Mary and Joe our average clients? Perhaps they're not, but the moral of the story is that many of our challenges have reasonable solutions in the mortgage environment. I pride myself on knowing lender guidelines better than anyone else. So trust your client with someone who cares about them as much as you do.